Yes, in this video I will give you a short example of how to take different accounts and put it into a profit and loss account and a balance sheet. If we take the number of accounts, we have it over here in the left column. We have several accounts, and it's our task to actually put these figures into their right spot in either the profit and loss account or the balance sheet. So in the first one, we see it's sales. Sales drove into credit of 55,325, and then we have variable production costs. I'm not gonna mention all the numbers, but I'm just gonna mention how you do it. Then you have cost of premises, staff cost, other cost, depreciation of production and equipment and machinery, cost of premises, staff cost, cost of promotion, cost of premises, staff cost, other costs, depreciation, operating equipment and furniture, interest costs, tax of the year's result, production equipment and machinery, accumulated depreciation, production equipment and machinery, operating equipment and furniture, accumulated depreciation of operating equipment and furniture, raw material and ancillary materials, goods in production, finished goods, trade debtors, prepayment, bank deposits, share capital, reverses, profit and loss transfer, long-term debt, credit institution, supplier of goods and services, other creditors. And then down in total we have in debt, and in credit we have debit on credit we have 80,039 in each one. So the first task is to actually look at the profit and loss account. And in the profit and loss account, we saw that sales was 55,325. Of course, these are the net sales. Therefore, net sales is the first one to go. And the next one is the variable production cost. And in here, we include this, cost of premises, all the way into depreciation of production and equipment of machinery. This gives us the total of 32,758. Therefore, now we can subtract the production cost. This would give us the gross profit of 22,567. The next one is the distribution costs. As we see here, it's 6,748. And as you see here, if we include cost of premises, staff cost, and cost of promotion, we have the total of 6,748. Then we have administrative cost of 5,845. That's cost. That includes. So if we take these, we have the 5,845. So if we take these four, we have the 5,845 as we talked about. Then in order to know the operating income, we have to take the gross profit and subtract distribution cost and administrative cost. Then we get the operating income of 9,974. Then we have to subtract financial cost. Financial cost is interest cost in this one. So here you have to subtract that. Then you get result before taxes, and then tax of the year's results should also be subtracted. As you see very well here, it's subtracted here. And this gives us the year's result. Moving along to the balance sheet. In the balance sheet, you see the fixed assets as the first. You see production equipment and operating equipment and furniture. fixed assets in total. Here again we look at the Excel document. And as you see, production equipment and machinery, and you see accumulated depreciation of equipment and machinery. This should be the amount that you should subtract of the fixed assets. So this is the value that the fixed assets needs to be subtracted from the fixed assets. Therefore, you have production equipment and machinery, and you should take this number into account and then subtract the 6,155, which gives us 6,301, which should be the amount that you should say that this is the production equipment and machinery. Then you have operating equipment and furnitures. Operating equipment and furnitures, same story over again. 6,253, and then subtract 3,152 because of the accumulated depreciation of operating equipment and furniture. This gives us a total of the small amount of 3,101, which gives us fixed assets in total of 9,402. Then we have the current assets, stock on goods, raw material, and material. You see here we just take the figure and we just move it over to the balance sheet. And then the next one is goods in production, 895. Goods in production. Then we have finished goods. Then we have outstanding amounts, trade debtors, prepayments. These you can also take here. And then you have a bank deposit, which you also take over here. Then you have current assets in total. And then you have the assets in total, 25,248. Then we go over to the liabilities. Then we have the share capital. Again, here it's important to move the figures over so that you get the right amount. And then you're able to fill up the balance sheet, and there will be an equal value of liabilities and assets in total.